Luxury badges feel like magic until the bill shows up. I know because I chased that magic once and, the number slapped me awake. Here's the simple truth I wish someone told me at the lot. Depreciation is the quiet monster. FAA says the average car loses about $4,680 in value each year. That is the biggest cost, bigger than gas for most folks. Now zoom in on luxury. Industry data shows luxury cars drop close to half their value in 5 years, while non-luxury loses more, like a bit over 1/3. That gap is huge when the sticker is big. Think about a high-end sedan that falls like a rock while a regular one drifts down slower. Some models crash even harder, like those extreme cases you hear about losing tens of thousands in 5 years. It hurts twice, because insurance and finance charges often ride higher too. And yeah, I get the pull. Soft leather, quiet doors, you feel successful. But the math does not care about vibes. If this sounds like the kind of messy but real talk you want more of, that's what we do here at Recall Roadmap with Morgan. So yeah, subscribe if you want in. Here's the deal I make with myself now. I ask what I am actually buying. Comfort, safety, or just a logo. Because paying for a logo is like buying helium. Fun for a minute, then it floats away. Do you want to see where every dollar goes before you sign anything? Good, because I'm opening the hood on the real costs next. Let's break the cost into buckets you can measure. First bucket is depreciation. Average cars drop big each year, and luxury drops more over 5 years, around almost half on average, compared to roughly a bit over 1/3 for non-luxury. Second bucket is financing. AAA pegs average finance charges at about $1,332 per year, and luxury loans can run higher because the price is higher. Third bucket is insurance. Nicer cars often bring higher premiums due to repair costs and theft risk. Fourth bucket is maintenance and repairs. Out of warranty, luxury parts and labor usually cost more, and downtime stings if you need a rental. Now leasing. Leasing shifts the risk to the bank using a residual value. In many states, you pay sales tax only on the monthly payment, not the full price, which helps cash flow, but rules vary a lot by state. Leasing can be cheaper than buying if the residual is strong, your mileage fits, and you invest the cash you did not tie up. Heavy miles can break a lease with penalties, though. Buying can win if you keep a reliable car a long time after the loan ends because depreciation slows and you drop the payment. So I do this quick test now. Annual cost equals depreciation plus finance plus insurance plus maintenance plus fuel plus tax plus downtime. Run it both ways with real quotes. No feelings, just math. Would you be open to choosing the deal that loses the least money instead of the car that shouts the loudest? Because next, I want to separate safety value from shiny extras. Here is where luxury can help you, or just charge you. Some features are real value. Good headlights you can see with. Solid driver aids that cut stress. Strong seats that save your back on long drives. But, some features are like glitter on a tool. They look cool and cost plenty to fix when they glitch. Big wheels bend. Fancy air suspensions age. Complex soft closed doors and gesture controls feel neat until a sensor quits. I tell owners to do an owner manual check before they fall in love. Open the maintenance section and list item by item. Brake fluid intervals. Spark plugs. Battery type. Transmission service. If a routine item needs special tools or dealer-only parts, your future self pays. Then cross-check recalls for the model so you know patterns, because downtime is a real cost even if warranty covers the bill. I also do a driveway test. Turn off the toys and ask if the core car still feels safe and calm. If the answer is no, you may be buying mood lighting, not engineering. Small tip to fight upsells. Say you want what the manual requires and nothing more, then point at the page. That one line saves hundreds. Do you want help turning this into a simple checklist you can print and take to a test drive? Great, because I've got one and I'll show you how I use it on my own cars next. Here's how I price a luxury car in the real world. And yeah, I still argue with myself while I do it. Step 1. Pull expected 5-year depreciation for both the luxury car and a non-lux rival, so you see that wider drop for luxury. Spread it yearly so you feel the bite. Step 2. Add finance charges using your real rate and term. Step 3. Get 2 insurance quotes, same driver, same limits. Step 4. List maintenance from the manual and add a cushion for premium parts and labor. Step 5. Estimate downtime. If your life melts when the car sits, give that a dollar number. Now run a lease scenario. Use the residual, the money factor, the exact mileage, and your state tax rules, since some states tax only the payment and some do not. If the lease total beats the buy total and fits your miles, leasing may be the cheaper way to sample the car during warranty. If you plan to keep it long after it is paid off and the model ages well, buying can win. I put all this into a 1-page checklist for you. Grab the pre-purchase cost checklist and make the numbers answer for you. If this felt useful, subscribe so you do not miss the next roadmap. And thank you for hanging out with me today. What would change in your life if you picked the car that quietly saved you the most money instead of the one that spoke the loudest?